put you on countdown.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears.
Sales.
Guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears. Guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter.
Okay, good morning.
Taking risks, making moves, seeking success. Together we'll conquer. No.
I am so tired, but I know I've got some work to do. And I figured I'd do it online with you. Maya, can you bring me my bottle of water that's on the counter, please? If you don't mind. So that the camera doesn't follow me outside. Thank you. And I do have a second camera. Just so everyone's aware, there's two cameras. 6'7". 6'7". Okay, we got NVIDIA, by the way, this week. It's a big week. We will ask Sidekick what to do. And I'm going to do that before I get on live. We're going to use a lot of just... Stage 4 clinger. Stage 4 clinger. Amazon. Penny, stop it. We're going to go Amazon and Microsoft we're going to look at. And if you don't know what Palantir does, this was a great video. I mean, I think it's supposed to be, this is supposed to be a political thing. I think anti-Palantir, but it explains exactly what Palantir does, and they're kind of in common sense. I mean, that was the best look at it. We're going to go over memory, because I still think memory is so bullish. So bullish. And a complete portfolio of risk. This is kind of interesting. A portfolio check. I don't know that I'd feel comfortable with this particular portfolio, but it's doing extremely well. Michael Burry made some news about his look into the circular finance stuff. Interesting kind of takes and looks at it. We will go over CrowdStrike and the cybersecurity stuff. They got killed on Friday morning, Wendy. They got destroyed. And I do think that these are opportunities that are out there, but I don't know. I don't know when's the right time to get in, because we'll talk about that, because there's always, and this is going to be a lot of articles and a lot of kind of, hey, if you're interested kind of stuff, go and read this, because it was a lot of reading this weekend. AI. Investors shift to Halo. We'll talk about that. Kalanovic warns about reversals in the international trade, and we're going to go over the big story, which is the Supreme Court. But this article was great. Yeah, and honestly, I watched a video from Wendy. I watched a video from, I think it was God, it might have been November or December, where the Cloudflare CEO, Net, was talking about how even though cybersecurity probably gets lumped in with software, it's really not just software, and that an AI that if you ask an AI to write it a copy, it's not going to do it. It just can't. And it can't keep up in real time. So their tools are kind of irreplaceable because the AI will more than likely attack its own code. So, I mean, can it get through CrowdStrike and stuff like that? Probably, but it doesn't label it useless. So let me look at my notes. Okay, get ready for the markets with one article. Tariffs, Halo, which is hard assets, obsolescence, loss obsolescence. AI continues to dominate the market. Cybersecurity. Burry is famous. Portfolio risk. Memory is still bullish. Do you know what Palantir does? Is Amazon still a good buy? So we're going to do this. We're going to take our standard kind of let's see, pre-earnings of AppLovin, and then I did a post earnings. I think I did a post earnings of this one. Yeah. There we go. And we're going to do a new chat. And I'm going to put in Amazon instead of for me earnings of Amazon for me. Okay. Give me a 6-month, 1 year, and 5 year outlook based on options, sentiment, and market sentiment with full chat chart analysis. Okay, let's see what that comes up with. I'll put this in the chat so that if somebody has Trendspider, by the way, we're using Trendspider. Oh, I guess it won't let me. Yeah, it's not gonna let me do that. We're gonna take. That's kind of the gist of what I just did. So we'll see what comes up because I do have to do the same thing for Microsoft as well. And then we'll do the NVIDIA earnings as well. Pre-earnings snapshot of NVIDIA. So we're going to do 3 kind of sidekick analysis today. And hit the thumbs up button if you haven't already. And let's see. Let's look at Amazon. We're going to pull up Amazon here. I mean, Amazon is, we'll close sidekick because it'll run in the background. Amazon was a buy in the 4-hour algorithm at 205. It doesn't perform great. Over 2 years, you've made more than 14% in the S&P. So I wouldn't consider Amazon a screaming buy in the 4-hour algorithm, but it is clear with the Bollinger Bands as tight as they are. Do you need me?
Yeah, sorry. Tomorrow, 9 o'clock, appointment for water.
Tomorrow? Oh, yeah.
Uh-huh.
Yeah, that's fine. No, that's fine. I thought you were getting the reverse osmosis installed tomorrow. I was like, ooh, yay. They're just taking a water sample, right? That's fine. These fuckers are going to go through, You're welcome. But look at the 9-day. We've gained confirmation. Look at the 21-day. You've got a gap up to 221. The MACD and the RSI are coming up as low as we've seen them. It doesn't look bad, but then you get to the weekly, and we're kind of just sitting at that 188. You know, as the low. Last week we got down to 196. I think you could get, you know, am I buying at 208? No, because I have a big enough position that I don't think I need to. But let's see what Sidekick. I'll conduct a comprehensive post earnings. Mixed results, earnings per share, revenue expected beat by 1%. Revenue growth year over year. Q3 was 13.4. The market's harsh reaction. The stock dropped sharply after hours. Despite the revenue beat, the stock is down 7% from pre-earnings levels around 243. Currently trading at 210. I think 220 on this one is my kind of trim. Earnings highlights. The growth engine, North American retail, international, advertising. I mean, it makes sense. The $200 billion elephant in the room plans to spend $200 billion in CapEx in 2026. Predominantly on AWS AI infrastructure, this is what spooked the market. Management's defense, we're monetizing capacity as fast as we can install it. Very unusual opportunity. We have confidence these investments yield strong returns on invested capital. If there's anybody that I would assume is great at integration, it's Amazon. I mean, just go and take a warehouse tour. Market sentiment, bearish signals. Analysts, D.A. Davidson dramatic cut signals concern. 9-day losing streak before recent bounce. Magnificent 7 underperformance. Free cash flow concerns, only 11. That's probably the biggest one in as far as bearish goes. If they're spending $200 billion in capital expenditures, they could go cash flow negative, which isn't great. AWS acceleration, retail margins expanding, AI positioning, analyst consensus still. I would say another bullish is the advertising business, which it didn't pull up. Option sentiment, February 2020, $220 call, bearish, sold at bid. Yeah, Donovan, hold on. I'm not looking at Rocket Lab. I'll look at NVIDIA prior to that, but Rocket Lab, I don't own it. I don't think you look at the earnings for Rocket Lab because they're not making money and they're gonna spend a ton of money. So I think Rocket Lab is just one of those YOLO ones that you have, but we'll look at NVIDIA. News and accelerate alternative data, recent headwinds. Elizabeth Warren criticized the $7.8 billion tax break under Trump. German regulators restricted Amazon's marketplace. Price controls Pentagon clash with Anthropic over AI military use. Jim Gray, Amazon is difficult to own because it has diminished free cash flow. That's the issue. Recent tailwinds, top Fortune 500 for the first time in 13 years. Same-day pharmacy delivery, expanded to 4,500 city. AT&T partnership for private cloud connectivity. NVIDIA's demand in AWS is incredibly high. Should you buy this surge? Stay away from chasing the bounce. Here's why. Valuation stretch given free cash flow. The CapEx cycle is just beginning. This isn't 1 or 2 quarter issue. Yes, exactly. That's it. Prove it mode. As analysts said, Amazon entered prove it mode. They need to demonstrate AWS AI monetization. That's key. Technical damage. The breakdown from 240 to 200 created overhead resistance. Absolutely. Relative weakness. Amazon is the worst performing in the Magnificent 7 since ChatGPT launched per Chamath. That's a red flag when peers are stabilizing. Outlook on timeline. 6-month outline. Neutral to bearish. Price target 195. So if you're buying here at 205, your upside is probably 235. Range bound 200 to 230 as market digest CapEx story. Upside scenario 20% breakout above 240 if Q1 results show strong AWS monetization. Again, the next earnings, you could see it break out above 240. Key catalyst, it's late April. So 1-year outlook, cautiously bullish. Price target 240 to 280. I would agree with that. AWS, I mean, if you just look at the price, I mean, if I were to put a top here and look at this right there, I mean, that's 240. That's not out of the realm of possibility for it to get to. Is it getting there tomorrow? Probably not. But with a 1 year outlook, you're probably, if you're buying at 210, that's probably where you're looking to sell. And it's money that you don't want to trade short term. It's money that you're putting in for as an investment. 5 year outlook, bullish, price target 400 to 500. AWS will likely dominate AI infrastructure. Again, that's probably correct. So I think if you're buying a 210, and I think it was Austin of Rich Habits podcast, he and I were privately debating this, but I don't disagree with his 5 year plan, which is, hey, I'm just buying this because in 5 years it's probably going to double, and that's probably true. You'll probably have to put up with some type of dip down to 188 again. Or even below because they spend too much money. But that is a great, great analysis. My recommendation, don't buy the current bounce. Wait for a better entry, either sub 195, Q1 earnings clarity, see if AWS maintains the 20%, broader market stability. If you already own it, hold if you're long-term, 5+ years, but trim if you need the capital or have shorter time frame. Better opportunity exists in the stocks, not facing multi-year cycles. I mean, that's perfect. So let's do the same thing for Microsoft. Let's just rinse and repeat. So we'll do new chat. I mean, that is absolutely perfect. And we're going to do the same exact thing for Microsoft, same exact prompt. And hopefully it will get us a very similar thing. Now, Microsoft is a lot different. I will tell you my assessment of Microsoft are these three zones, okay? I don't think that we get down below 366, but you are trading at 395. This is a great stock at 395. I just can't imagine it not getting back up to the 450 level at some point in time. Again, at some point in time. They have to do a lot of things right, obviously. But look at this weekly versus what the weekly was on Amazon. I mean, this weekly, this has to bounce at some point. Who's coming in here to save this one? So I'll be interested to see what Sidekick says about it. But we'll take a look at those too. It's hard to say that Amazon will benefit from the tariffs because I think the tariffs are just not done yet. He wants tariffs. He will get tariffs. He implemented the 15% across the board, which, by the way, the European Union said, fuck no, we're not paying. And China, might say, hey, we're going to go lower than that. So you might, I think you're in for another Liberation Day type strategy. He's just setting himself up for it. Palantir, again, Travis, I'll kind of, where is the Palantir one? I think it is here. There. Travis, go and watch this one. That is exactly what Palantir is. I mean, that was the best explanation for me of what Palantir does. It was absolutely perfect. So let's look at Microsoft the same way we just looked at it. Post earnings, earnings per share beat, revenue beat, Azure growth, constant currency, 38%. Microsoft Cloud revenue up 26%. Despite the beat, shares plunged the next day, the worst day since March of 2020. The stock has continued to struggle. Around 397, down 18% from pre-earnings levels of 481. Key support and resistance. That's great. I mean, resistance is going to be 430 at the bottom. I want to sell at about 420 to 450, somewhere in that neighborhood. I don't want to sell before that. Market sentiment, bearish, AI ROI concerns, bullish, strong fundamentals. Key quote from the earnings: if I had taken the GPOs that just came online in Q1 and Q2 and allocated them to Azure, the KPI would not have been over 40%. That's the CFO. So This suggests artificial constraint on Azure growth due to strategic allocation to first-party AI products. Option sentiment. That's the real problem, by the way. Nobody's fucking using Copilot. I mean, everybody hates Copilot. Recent unusual activities, large put purchases, significant call activity at 430 to 480 for June. The options market is pricing in continued volatility. Target range 420 to 480. Bullish case. Q3 earnings, April could show improved Azure allocation. That's the problem with both of these. You're looking really till April. The sell-off appears to be overreaction. Microsoft is generating massive cash flow and it has contracted multi-year AI revenue. The current level offers a tactical buying opportunity for patient investors. That's a 6-month outlook. 1-year outlook. Microsoft's AI investments are long-duration plays with revenue already contracted. The market is punishing near-term opacity, but the 1-year setup favors recovery as AI monetization becomes clearer. 5-year outlook. Microsoft is positioning itself as operating. Again, 5-year target range, $800. That's double where it is today. 5-year outlook. Should you buy this dip? My take, buy the dip. Buy with discipline. Valuation reset. Stock is down 26%. Actionable strategy for swing traders, 3 to 6 months. Entry 390 to 405. Stop loss 375. Target 450. For long range investors, long-term investors, scale in at 395 to 420 over the next 3 months. Hold target. So, let me send this to my parents. Because they were telling me, please sell Microsoft today. Okay. That's Microsoft. Look, so we did Microsoft. I'm going to close that down. So we did Microsoft. We did this. Okay. Let's do NVIDIA earnings. So we're going to do pre-earnings release. And I've got a pre-earnings one set up. And I will do this because this has been spot on. This prompt, spot on. And we're going to do it for NVIDIA. We'll do it for Dell too. Why not? We'll throw Dell in there. But let's look at the NVIDIA chart. But I think spot on. I mean, again, for Microsoft, I think that's you're at your 200 week. I mean, the weekly on the 200 day, you're there. It's at 370. I mean, what are you going to wait for it? Again, I think if you want to build a position in this, I think this is a great time. Is it expensive? It's still expensive. It is still expensive. I mean, from a fundamental standpoint, it's still expensive. Wall Street is pulling their price target down slightly, $596. If I told you you could buy a stock at $400 and it was going to almost $600 within the next couple of years, you'd buy it. You'd probably buy it. I mean, the risk reward on that one's not bad. Its valuation at 25 times forward earnings. I mean, let's just chart the PE. Select metrics. We'll go valuation and we'll go PE. I'm going to take out price return and we'll take out we're going to take that out. Let's look at this. I mean, again, if you were buying in 2022, let's see where the stock was in 2022. Back here, it's not even. There's 2020. There's 2022 at the 200 day, 200 week. So this is a weekly chart. And at that 200, again, for me, I don't want to sell it. I don't necessarily want to buy more. But I like it. I like it a lot. Now let's go back to Sidekick and see what it says about NVIDIA. NVIDIA earnings, if I'll provide you with comprehensive sheet, earnings expectations, current valuation, current price 189, market cap 4.6 trillion. Again, it tore through that $4 trillion mark. So could it get there? Fundamental analysis, revenue trajectory, this represents 14% sequential growth. Key business metrics, analyst expectations. Gene Munster's Wall Street 28% growth estimate for 2027 is too conservative. He projects 40% growth. News slow, positive. Meta announced multi-year deal. Concerns. Software stock sell-off, creating AI spending skepticism. Chart analysis, what the price action tells us. Daily chart trading at 185 to 195. Failed to hold 195 multiple times. Again, I've been trimming at 190. Weekly chart, strong uptrend from September 2025, the lows of 167. Key levels of support 180 to 182. That's clear. I mean, that's just clear. Technical issues, no major red flags. Smart money activity. Mostly selling, but this appears scheduled and planned from their CFO, EVPs, and CEO. Options flow, large call sweeps at 190, 195, 200. Net sentiment appears cautiously bullish. Congress, hedge funds, Nancy Pelosi holds NVIDIA, Tiger Global reduced holdings in Q4. David Teppers trimmed NVIDIA, increased Micron. Major business risk from the SEC filings. What could go wrong? Guidance disappoints, margin compression, Blackwell delays issues. I think that's the biggest bear. AI spending slowdown, the software sector, what could go right? Blowout beat, revenue 67 billion, earnings per share $1. I think that's priced in. So I think the bull case is priced in. I think the bear case isn't. And that's the biggest issue that I think you have with NVIDIA is if there's a bear case, if there's anything bearish on that call, you get the downside. The bull case, I think, is priced into the stock. If you believe the growth story, full year, but current price 190 suggests upside target 30%, upside bull target 74%, based on historic moves. Entry strategies, aggressive. If you're very bullish, enter at 185 to 190. Moderate, wait for a post earnings dip to 175 to 180. My synthesis. What the data tells us remain incredibly strong. The concern are real. Valuation is rich. The 190 question, is this a good entry for long-term investors, 12+ funds? Yes. Current levels likely look cheap in hindsight if the AI build-out continues for early. And Jensen has told us it's continuing. There's a 60 to 70% chance of a beat and raise, but the stock could still sell off. Bottom line, if I had to put a number on it, good entry for new position, 175 to 182. That's fantastic. Acceptable entry, 185 to 190. Scale in target build position between 170 and 190 over 2 to 3 months. Avoid chasing above 195. Before earnings, my biggest concern right now, the stock rallied 10% in the last 2 weeks into earnings. That's unusual and suggests elevated expectations when stocks run into earnings. They often sell the news even on good results. So let's see. Can you tell me what NVIDIA stock has done post earnings for the last 2 years with a look at the earnings day reaction and a 10-day afterwards window? Please include all details to formulate a plan. Morning, Lisa. How's your Copilot for Studio? Yeah, that's what I hear is I think most people have Copilot as part of Office 365, but they haven't done a very good job of selling it into that. So most small, medium businesses aren't even like glomming into Copilot. And they're providing There's always some other solution that people want to use, and it's not Copilot. That's the problem. So, and we'll look at, you know what? Let's look at this one. Let's look at this one too. New chat. We're going to look at Dell. We're going to look at Dell since people started bringing up Dell in the, and you can have, by the way, a bunch of them running at once, I think. There we go. Oh, and then we're going to go into the podcast. This is I'm taking up a long time on this. I'm going to be here for a while. Let's close this down. Let's look at the Dell chart. I think 113 was like, okay, it's a decent buy. It got you in at 120 here. Dell in the pre-market at down 0.38. I mean, for me, that's kind of holding on to that green line a little. It's kind of in this area. If you wanted to put a, just kind of a almost, there's your bottom. That's not what I wanted. Oh, stop. We're going to hit escape. And we're going to do this. We're going to put a bottom right about at 112. And then we're going to put, that's a clear range. You maybe could go down a little bit. That's 111 to 170. Probably gets back there at some point in time. So for me, that would probably be it. Let's see. NVIDIA, it came up with a plan. Let's see. Here are all the earnings. Now I can provide you with a detailed analysis of NVIDIA's post-earnings over the last 2 years. Let me break them down. Day after, all up, except for a couple in 2025. The most recent ones, they were down. So November 2024, 10-day move. Again, these are down. Those don't seem like great earnings. Let's see the verdict. If you're looking to enter best entry scenario, 175 to 180, don't do this. Don't buy the day before earnings at current levels. Don't hold options through earnings. Don't assume beat equals the moon. Probability weighted scenario, 25%, 10% to $19, 45%. Plus 1%, 20% chance. Again, you're kind of all across the board. Find out what should you do. Best strategy for February 25th. Earnings, if you own at 190, sell 30 to 50% before earnings to lock in profits. There you go. And let's see. This is Dell. We're going to call this Dell earnings. Pre-earnings analysis. Proceed. So Dell, buy with caution in the 115 to 150 range. Bull case 70% probability. Bear case 30%. Downtrend from October. Positive signs holding 110. Yeah, the wild card memory chip cost. So okay, I've got enough to go into this. And record the podcast now. So let's just put that down. We will close this. Put this. Okay. Now I'm going to go into the podcast. So, let me just expand this a little so it's bigger. Okay. Good morning. It is Monday, February 23rd. I've got a huge show, a great show. Let me just tell you, I've been on YouTube for an hour now. We've been using Sidekick from Trendspider. If you don't have Sidekick, again, Trendspider is on sale for the last day today. Then it goes to regular pricing. Don't miss out. And if you don't know anything about technical charting, again, they have a sale at the advanced level up to 52 trainings per year. Divide that price by 4, and that's what you're basically doing for a training class, a one-on-one Zoom session with a Trendspider product expert. You could go half price and go to the standard. This is the Temu version of Trendspider, but I'm going to show you a ton of good things because we've got a big week in the markets this week. And if you want to know, if you want to get ready for the markets with just one article, here's what you need to know. We're going to go over tariffs because tariffs are the big story in the market today. We're going to go over Michael Burry about the AI boom and what has happened in the past with some of his stuff. I'm not going to touch on crypto fund outflows because crypto continues to kind of downslide. We will absolutely dive into NVDA earnings and a trading plan. We will go over Halo, hard assets, what I did last week, which was analyze the stock. Halo, I was a dummy. We will go over cybersecurity, because cybersecurity may be the best opportunity in the market. We will go over a portfolio of risk. We will go over exactly, and I will give you a great Instagram link for exactly what Palantir does. I will do an analysis of Amazon and Microsoft. Both are beaten down. Okay, energy is the bottleneck. Top 10 AI, gas and storage. Real estate, is it recovering? Financials, like I said, there is a big show ahead. So let's get into it right now. The big story is tariffs, okay? Supreme Court on Friday, they tore down tariffs. And what did the market do? Well, let's look at the 4-hour, because the 4-hour has you in here at 6:02. But you'll see this big candle in the morning of Friday. It's 1%. That's a big candle in the Qs, okay? It went from 10 to 15% over the weekend. I would expect more changes and more outrage and more big board. Remember in the Rose Garden of April last year where he pulled out the big board and the market dropped 4 and 5%, which again are big moves. Trump wants his way. It's clear he can't get it through Congress. And it's clear from his language, he's not going to make a move to go through Congress. You have the State of the Union address tomorrow. Okay? If you want to know what it means, what's next for stocks, Seeking Alpha gives it to you. What do Seeking Alpha analysts say about the future of tariffs? They went and interviewed like 4, maybe 9 people. And these are experts. These are people that know what they're talking about. Again, I'm just a douche on the internet. What do I know? I think the story is actually a non-story. I think the taco trade remains. I think when you see the market dip, you buy the dip. So after the Supreme Court tariff rulings, what should you do next? I don't think it changes your plans unless you've got something like Wayfair or Birkenstock or some retail stock where they were getting charged a ton of tariffs, or something like Costco. If you want to trade 50 times forward earnings for Costco, then yeah, they may have something to do with tariffs. They may benefit because they had a huge lawsuit against them. But Marko Klonovic, who is, Klonovic, Klonovic, who is he? I forget who he is. Klonovic's interpretation. In a post on Truth Social, Trump said this: the announcement prompted, JP Morgan, head of global research. That's who Marko Klonovic. I know, I can see the dude's face. But he said, hey, this may signal good things for U.S. stocks, but the overseas stocks may get hit. And that's what he's saying, because we've seen international, if you just go up to market data and you look at global equities and you go year to date, emerging markets up 13%, developed world markets 11%, the world minus US up 11%. That's just year to date. And you look at us, the S&P is up 1%. Again, is the US beating the rest of the world? No. Have these tariffs been great for the US? No. They've been great for the rest of the world because you can see it from their markets. Now, that's just because they come from a place that's beaten down. But if you were to go to something like VOO, and I know a lot of people track SPY, I don't particularly track SPY. I buy VOO and I buy QQQ. But if you look at VOO and QQQ and you say, okay, I'm going to go look at a weekly chart, and this may revert back to the 4-hour if the 4-hour comes into play here because it's a strategy. But again, if you go to VOO and you go to a weekly, we're not even down to the 200-day right there, the 200-week. But do you notice something on this screen? Okay, because you have to know how to read charts. And I'm a huge fan of reading charts. And what I see are the Bollinger Bands right there. These, go and Google and understand Bollinger Bands because they are contracted. And the last time you saw them contracted was March of last year. Okay, and if we are to follow last year, that would mean we would go down because we went down big. You see those blue shaded areas? Again, they were contracted. When you look at this, it was contracted. We went down. That was 2022. Here, they contracted. We were on our way down in 2023. When you're trading at the top of the Bollinger Bands, again, what's the upside? Is it more likely we go up or more likely we go down? Because the MACD still extended. The RSI still overbought. So if you're looking at a short term of the Bollinger Bands, they don't look fantastically like, contracted. And the MACD is below that. But you go to the weekly and you can clearly see the Bollinger Bands are contracting. So what do you want to do? Well, maybe it's, you hear about Halo, which is heavy assets, low obsolescence. Maybe you read that and you go and research the Halo stock like I did on Friday. Douchebag. I am a douche on the internet. I thought it was Halo stock. It is Josh Brown's shorthand for heavy assets, low obsolescence. And he's basically telling you, invest in things that companies that actually make things. McDonald's, Exxon, Deere. Some of that stuff, maybe it's best. Use the tools that you have and research those types of things. But for me, AI continues to dominate the market, continues to be the catalyst of the market. It's moving faster than ever, and this particular slideshow on Instagram is a great review of what happened last week. Claude agents built a C compiler from scratch in just 2 weeks. TikTok owner ByteDance released, they beat Google to this new video model, which was unbelievable. Google Chrome got agentic auto browse. Claude makes a powerful presentation in less than 5 seconds. Robots train Kung Fu with Shaolin monks. Again, OpenAI launches GPT 5.3 codec. Stanford AI Lab releases Wonder Zoom, generates a 3D image from a single image. Boston Dynamics shows off their new skills. This is a complete list of what went on last week, and you can go through it. But you know what? Somebody call 911 because there was a murder last week, and it was from the cybersecurity stocks. Why? Because of that Claude code that you just heard. Here are a bunch, and I will give you a bunch of great articles that I read over the weekend, that this is one of those things that any reaction is an overreaction. Now, I own 2 of these stocks, okay? And they are down big. This is Palo Alto Networks. I was selling when it got to that 200. I still own a position, but I own it way back here in like the $70 range that I bought. So I don't have this huge downside. You are down. We talked about the 200, the weekly 200 day. You are down at that level. When's the last time you were down at that level? It was COVID. You didn't hit it when they were taking interest rates way up back from April 2022 down to January 20. You didn't hit it, but you're hitting it now. And that, to me, is a great opportunity to get into a name. Am I going to buy into this one? Maybe not. Maybe the other one that I like is CrowdStrike. And we take a look at a long-term chart of this. This isn't even close to the 200-day. And again, we didn't have the 200-day until 2023 on this one. And you got the 200-day back in August 5th, 2024. Guess what happened this time? This was when CrowdStrike took down the world. Remember that? So any reaction is an overreaction, but go and read some of these things. Anthropic bringing down CrowdStrike, Cloudflare, Palo Alto Networks, and Zscaler with one tweet. That's all they did. Okay? And here's Shy going over it. The popular narrative is that AI is coming for security. Nothing could be further from the truth. The market just repriced $50 billion worth of cybersecurity market cap off a headline that doesn't actually threaten the core security stack. And that's the key. It doesn't threaten it, but the market is being irrational. It's basically going after a lot of names and asking questions later. Why? Because we've had these historic 2 years, 3 years in a row. Security is not getting disrupted. Oliver points it out here. It's one of the most illogical sell-offs in an already illogical market. CrowdStrike now trades 85 times NTMPE. Again, all of these stocks got taken down. I tend to agree that this is just a crazy, and Rita puts it here, just when you thought the cybersecurity industry was better positioned than generic enterprise SaaS, the agentic AI era, the whole industry was hit by a rock when Anthropic announced Claude Code. And she breaks it down. Is this a time to start buying? Cybersecurity's Anthropic headwind, this makes no sense. She's saying BUG, which is an ETF, buy. And she gives you the reasons here. Now, again, all of this, the CrowdStrike CEO Kurtz pushed back. AI replaces security. Claude, I have to be straightforward. Building a replacement. This is Claude's response because George went in and said, can AI replace security platforms? I asked Claude to build a CrowdStrike replacement. I have to be straightforward. Building a replacement for CrowdStrike isn't something I can do here. Its core capabilities include real-time kernel level endpoint monitoring across millions of devices, a proprietary threat intelligence graph built from trillions of security events. That's not something you can replicate with a script. It's an infrastructure product. If you want to create AI, you need GPUs. If you want to deploy AI, you need security. That's not a hallucination. That's a fact. And again, it's a great time to buy. And this is absolutely, Michael Burry went into his Michael Burry point. Okay? And Michael Burry started saying, hey, AI, some of that circular narrative, that circular stuff, Michael Burry went into his Michael Burry ping. Just remember, okay? And this long tweet right here points it out. Michael Burry shorted Tesla at $180. It went up to a split adjusted price of $1,200. He lost a boatload. Okay? Today he's shorting the hyperscalers and he's doing it very publicly on his Substack and he's putting it out there. The point of this is not that Michael Burry is wrong. It's that many times Michael Burry is incredibly early. Okay? So it's not about, is he wrong? It's about the hyperscalers can they actually, produce some revenues? That's it. And if he's right on the timing, then everybody else in the market is wrong. Again, Burry has been early. If you watch the movie The Big Short, he was early. and it almost cost him everything. So again, many times Michael Burry is right, but many times his timing is wrong. So be careful of who you're listening to, because I do think that these hyperscalers have times to buy. And we will go over two of them, Amazon and Microsoft, here in a little bit with Sidekick, okay? But I want to bring you a portfolio of risk. Here is Oliver's portfolio. The only top 3 positions in the 85% of my portfolio that are in the red are Path, UNH, and Zeta. I remain very bullish on the AI application names like Lemonade, Zeta, and Path. He goes over his entire portfolio. Is this a portfolio that you could hold on to? I couldn't. Lemonade, not making money. Nubank, no. Transmedics, incredibly risky. Amazon, again, we'll go over Amazon a little bit. UiPath, I don't like it. Zeta Global, not my big fan. United Health, Nebius is one that I actually do own. NVDA is one that I do own. SoFi, incredibly risky. GXO Logistics, don't own it. Want to own it. Tesla, don't own it. Probably, well, I do own it. Alibaba and Albemarle. That's not a portfolio that I could sit and hold for the next 5 years. But you want to know something that I will sit and hold for the next year? It's memory. And this is the Verge podcast, okay? There's a severe shortage of memory. Severe. It's just now starting to absolutely get talked about. But we haven't seen price spikes like this in a very long time. In fact, Dell, one of the things, and I'll look at Dell in a little bit because they have earnings this week, and I had Sidekick look at it, and Sidekick brought this up. Hey, Dell, the issue is memory pricing. And you're seeing a lot of PC companies come out and say, we don't know the pricing of our new stuff. Okay, I had Sidekick create me a plan. Again, Sidekick created me a plan based on memory. And where is it? It's a little bit older, so I probably have to look at it. This one, isn't it? No, I have it in here, but it is for me. It is for me, and it's not for anybody else. Again, it can create you a plan, an entry, support, resistance. I do own a lot of Micron. Micron is a great stock. I own it at about $400. I bought some at this 260 level. I bought some back here at this 200 level. I've basically been adding to it. And you can see, triggered, buy at 400, bought at 400. So memory is likely to be huge. And Sandisk just posted an image stamped February 24th, tomorrow, signaling an anticipated announcement. Speculation ranges from memory pricing strength to a potential new partnership. I want you to go to Amazon and look up Sandisk memory cards and do a 90-day price tracking of those things. Again, I think you're bullish on Micron, Western Digital, Seagate, and Sandisk. Those are the 4 names that I look at. Those are the 4 names. I've traded Sandisk, I've traded Seagate, I've traded Western Digital, I own Micron. And now, Palantir. This is a stock that a lot of people own. You've heard me talk about it. It's hitting that 130 kind of price support level. Palantir, it's expensive. If you go and look at it using any of the tools that you have, I use Seeking Alpha, but Palantir, it's a rating D. It was an F 6 months ago, but it's trading at 102 times forward earnings. Even if you bring in the growth at 2.29, that's significantly high, okay? But analysts are revising everything higher. So is it a great stock? Well, Wall Street says that it's worth $189. I wouldn't put that past it because it's 52-week high, $207. So if you're buying down here at $130, know what they do. And I had an idea. I knew they were an AI platform. I know they have these boot camps and stuff. It's a political post. And, it's supposed to be anti-Palantir. But this was a fantastic and absolutely amazing description of what Palantir does. So I will put it in the newsletter. Again, the newsletter is free. You get it every day after I do a podcast. Tuesday, I have office hours. I will answer any question from the paid members on Tuesday. Tomorrow at 9 a.m., I will be on. It is a great video. And again, you can get it, the link, from the newsletter, dailystockpick.substack.com, or just go over to Linktree. Literally, the link is typing out down below my head throughout this entire podcast. Every link that you want is down here. The newsletter, Seeking Alpha. I always suggest you get Alpha Picks and Premium, the bundle. You save $159. Alpha Picks is just a data-driven portfolio that beats the S&P. Premium, you get the quant rating like I just looked at with Palantir. When you look at Palantir, you can quickly look at it and say, hey, it's a hold in the quant. Why? The valuation, growth, profitability, momentum, and revisions. And if you want more details than that, you can get it down here where it outlines it for you. It raises concerns and bullish. And again, the quant beats all of the Wall Street analysts. So it's a stock reading technique that I use, that I can go and engage a stock. So I see something like this and I can go and exactly look at it. So let's look at a couple of things. Amazon. Because we just got all the 13 Fs from all of the major hedge funds, and it's mixed signals as as hedge funds place opposing bets. You know, is Amazon a great buy? Well, let's look at the chart, because all you care about is the chart. Okay. Now, in the 4-hour algorithm, would I trade this one? It makes you 14% over 29 trades over the last 24 months. Average win 4.38%. You can see the 4-hour algorithm makes you 14%. Buying and holding makes you 19%. Now remember, we've had 20% plus gains in VOO the last 2 years. So you should be up 40%. This is underperforming the S&P. It's underperforming QQQ. It is one of the worst. Mag 7, if we just look at the Mag 7 here, now I added a couple in here. If you look at the 1 year or the 3-year performance on this one, okay, Amazon's down here. 3-year performance, 116%. That's not bad, because remember, every 7 years, a stock is supposed to double. Amazon did it in 3 years, so it's not bad. But NVIDIA has made 787%. Broadcom has made 458. Meta has made 279. Google has made 232. Netflix, 126. Now, I own Apple. Apple has only made 73% over the last 3 years. Has it been a great one? It's been okay. Again, it's about risk reward. I like Apple. But Amazon, if we go and look at Amazon right here, in the quant, it's a hold. But Wall Street is screaming it's a strong buy. And their price target is $280. Do you believe that this one will get to $280? Well, if you look at it on the 4-hour, you can see right next to my head, the MACD below its oscillator. It's gotten pumps every time it's been below the oscillator. You know, this chart only goes back to the beginning of last year. So it's not like, oh my God, this was a great opportunity. During the Liberation Day, great buy at 180. Only if you sold at 240. Only if you sold at 240. Because right now you're at 206. There are plenty of other stocks, including VOO, that have done far better since Liberation Day. And if you go and look at a weekly chart on this one, okay, this one doesn't look half bad. Your RSI is at 42, meaning it's oversold. Your MACD below the oscillator. Every time it's gotten below the oscillator, you can see it pumps back up on a weekly. So is this one a screaming buy? Well, I went into Sidekick and I asked it for post-earnings analysis. I said, can you do a post-earnings analysis? Again, this is part of Trendspider. And you can get Trendspider on sale. Okay, it's just one more day. But you can go and ask it these questions. Can you do a post-earnings analysis of Amazon for me? Include the most recent price action and tell me if I should buy the surge or stay away. It goes over post-earnings analysis. It gives me key earnings insights. The $200 billion elephant in the room, it's the spending. It's the spending. The management's defense, we're monetizing capacity as fast as we can install it. Very unusual opportunity we have. Confidence these investments will yield strong returns on invested capital. And you can see the 6-month price action sucks. Support and resistance 195 to 200 gives it to you. Key support 185 to 190. Resistance 225 to 230. So you could start selling into that. Strong resistance 245 to 250. Remember, Wall Street thinks this is a $280 stock. It won't get there without significant resistance. Market sentiment analysis, it breaks down the bearish signals. I will tell you, the free cash flow number 4 is the biggest issue. The bullish signals, all of its growth. Option sentiment, bearish, $1.5 million call at 220 for March. Again, bullish, bought at ask, 210, February 20th. Large institutional players are hedging with long-dated puts while taking short-term tactical positions. This suggests uncertainty rather than conviction. So you can see the news. And again, this goes out and looks at it. 6-month outlook, neutral to bearish. 1 year outlook, cautiously bullish. Price target 240, 280. It's trading today, right now at 206. If I told you could make a 20% gain from $200 to $240, you tell me, yeah, I'll do it within 1 year in a market that's just crazy. Yeah, you'd probably do it. 5-year outlook, price target 400 to 500. AWS will likely dominate. Retail becomes a cash cow. Advertising scales to 150 billion. Project Kuiper, the satellites, could be a $50 billion business. Healthcare ambitions. The key assumption, management delivers on AWS AI vision. If they do, today's $2.3 trillion market cap looks cheap for a company generating 150 billion plus in AWS revenue alone. Again, 5-year probability weighted 90 to 120%. If I told you that you could buy a stock today at 200 and it likely within the next 5 years could go to 400 at a 90 to 120% probability weighted, not bad. The recommendation, don't buy the current bounce. Wait for it. A better entry, either sub 195, Q1 earnings clarity. This is not something that you're playing for right now. This is something that you're waiting for the next earnings. But the broader market stability, tech sector is rotating. Wait for leadership to stabilize. If you own it, hold. If you're long-term focused, but trim if you need the capital or shorter time frames. Better opportunities exist. That is Amazon. Now, from a chart perspective, you can see I'm trading it between this 188 and 241. When we get back to 220, I will start trimming this one. I own a large amount of this, but there may be better opportunities in the short term. But for that 5-year plan, you damn well know I will be buying back at 200 once we have some clarity with the next earnings. That's the plan that you need to set for yourself. Microsoft. Let's go in and look at Microsoft. Because hedge funds make contrasting calls on Microsoft as well. Some are selling, some are buying. So let's go do the same thing with Microsoft. What does Wall Street think about Microsoft? They think it's a strong buy. They think it's a strong buy, and their price target, 596. 596. Now the quant, let's see about the quant. Why is it giving me this problem? The quant is a hold. And it goes over the competitor's unique values. Seeking alpha valuation faces challenges, challenging valuation. Growth is mixed. Profitability boasts exceptional profitability. Momentum, it sucks. Downward trend with a 6-month price performance of minus 22%. Look at this chart. I mean, this chart doesn't look fantastic. This looks like it got to that 552 twice and then just pulled back. So what's a plan for Microsoft? Well, let's go in and ask Sidekick about the post plan. I did the same thing. Now, key support levels, resistance levels, you got to go through a lot of resistance to get up past where you are. But you're right at the support levels. The stock is currently testing the 395 to 400. You're trading at 390. You are down, let's see, 1.74%. People are selling. And the bearish factors, it's the AI on ROI concerns. The bullish, strong fundamentals. 365 Copilot momentum, 15 million paid seats. Daily users up 10%, contracted revenue. Again, key quote from the earnings. This is from the CFO, Amy Hood. If I had taken the GPUs that just came online in Q1 and Q2 and allocated them to Azure, the KPI would have been over 40%. Again, they're just spending money. Recent unusual activity, 6-month outlook, target range 420 to 480. You are trading at $390 right now. That's a pretty good, cautiously bullish sentiment. And it's saying 393 to 400 levels offers solid risk reward accumulation. 1 year outlook, they're saying target range to 500 to 580. Again, it's probably next quarter's earnings that are key. The risks. What does it bring up? Memory chip price increases impacting CapEx margin. Memory. 5-year outlook. Target range 800. Again, doubling in 5 years. The bear case, open source AI models, commoditized infrastructure, antitrust breakup of cloud productivity business, catastrophic loss of OpenAI partnership. Is OpenAI going down? Because then Microsoft would have to go down as well. So it gives you the final action. The final verdict, the post-earnings collapse in Microsoft is a market overreaction. Any reaction is an overreaction. CapEx growth outpacing revenue. Sector-wide AI disruption, short-term profit taking after weak guidance. However, the fundamentals remain intact. Double-digit revenue. The current price, $397, and it's $390 right now, represents a compelling entry point for investors with a 12-month time horizon. The 6-month outlook is choppy but likely higher. The 1 to 5 year outlook is strongly bullish. It looks like a time to buy. Now, I have a very large position in Microsoft. Am I looking to buy a little bit more? If we get down to that 200 weekly moving average, look at what has happened the last couple of times. October 2022, you were trading at 221. It went all the way up to 522 within the next 3 years. So again, you doubled within the next 3 years. Do I think that's possible with Microsoft right now? If you look at some of the valuation perspective, it's 23 times forward earnings. If we were to chart that, that's as low as you were buying back here in 2022. So I don't think that it's a time for me to get rid of this. I'm looking to probably add to this. I will be taking profits as it starts to go up. But you look at these, again, using a Weinstein analysis. It indicates stages. And these are stocks that Trendspider has said, hey, we just use these. Robinhood, Palantir, SoFi, and ARK. Welcome to stage 4. And if you watch Wedding Planners, stage 5 is the clinger. Stage 5 is where you want to, it goes back to stage 1. Stage 4 identifies breakdowns as price slips below a declining average with increasing downside pressure. These stocks, stay away from them until they turn bullish. You're in a market where it's profit taking. And the Weinstein indicator can tell you all about this. It's a visual observation, and you can literally import it into your Trendspider setup. It's easy, it's simple, and you can look at the stocks that you own like this. Now, I've been talking about AI, but we all know energy is the bottleneck. If you look at the market data and you look at the year-to-date equity sectors, what energy is up 22% year-to-date. And these are the top 10 oil and gas storage transportation stocks year-to-date performance with their quant ratings. Go and investigate them. My particular energy one, MPLX, not S, MPLX. This is a stock that has a 7.4% yield, okay? And we can chart this one, and you can look at the metrics, and we can look at performance. I want to include the dividend, so I go to total return. And I look at this against the S&P, and you look at 3 years, 117% versus 72%. 5 years, 272 versus 78. Now, year to date, 12% versus 0.94%. 1 year, 16%. Again, this is energy. Energy is the bottleneck. That's what I like. Now, real estate is outperforming, as last year it was a huge laggard. Remember, I've always talked about what's a laggard will catch up. Real estate is catching up. Continued to gain last week. Now, are you interested in REITs? Because this article brings up a ton of REITs that you can look at. Josh Brown gave his best stocks in the sector, and that's what this entire article is about. Financials recovered last week. You know, they're the worst performer year to date. Again, you look at this year to date U.S. equities, year to date financials are down 4%. They're starting to come back. But Blue Owl is the canary in the coal mine, like I talked about last week. That's a big one. And you've got a big week coming up because you've got NVIDIA earnings coming up. And if you looked at Catalyst Watch this week, this is what the Catalyst Watch is all about. I mean, this should stand out like a beacon because NVIDIA, Wednesday is the Super Bowl of earnings. NVIDIA for the past 3 years has been a day where you sell the news and you buy a few days after the rally. I just know that because this is the game plan that I've always had. And Trendspider, even maybe 2 or 3 days ago, they gave you a strategy of buying 15 days before the earnings and then selling on the day of the earnings, before the earnings are announced. Will a blowout move the market? Again, have investors become immune to good results from the AI bellwether? Well, what do? I go over to Trendspider and I say, hey, it's trading at 192. I know I like trimming this one at about 190. So today I will start trimming it before its earnings. Is that a smart move? Well, let's go and ask Sidekick. And we went and said, hey, can you do a full Wall Street style analysis before the earnings? What price should I pay? Well, we'll go down to the final bottom line. If I had to put a number on it, good entry for new positions, 175 to 182. No. Trendspider Sidekick is saying stay away. So I said, can you tell me what NVIDIA stock has done post earnings for the last 2 years? With a look at each earnings day reaction and a 10-day afterwards window. Please include all details to formulate a plan. I want a plan. Well, here's the NVIDIA performance for the last 8 quarters. It goes back to 2024. And you can see the 10-day move. Look, that's up. That's up. That's 2024 up. Ooh, late 2024, 10 days later, it was down. February 2025, 1 year ago, it was down 10%, a sharp sell-off. May 2025, it was up 2.5%. Does the risk match the reward? Again, you look at this chart, and you say, well, let's look at the weekly. It's not super extended, but we've been trading sideways since August. Does that make sense to take a risk and reward? Well, the final verdict, best strategy for February 20. If you own it at 190, sell 30 to 50% before the earnings. Lock in profits. If looking to buy, wait for post-earnings dip to 175 to 182. If trading earnings, the setup favors selling premium, put spread, not buying calls. Time horizon, short-term trader, high risk, minus 5% to minus 10% move. Long-term investor, 6+ month, current levels are fine, just expect volatility. My personal bias, 60% chance the stock is lower 10 days after earnings. That's based on pre-earnings run, because we've been on a pre-earnings run, historical pattern of muted reactions, growth deceleration concerns, sector weakness, and software. Again, is this a great one? I don't think so. You know, again, have investors become immune? It's a $4.6 trillion company. Could it become a $5 trillion company? Well, NVIDIA re-enters the PC market with AI-powered laptop chips. That's a big one. And in the newsletter chat, if you go over here and you look at the chat section, people were looking at Dell. And they said, you know what? Dell looks interesting. Let's go look at Dell. Because what they were noticing, and this is not me looking at this, I've been burned by Dell before. Okay? You can see 210. Richie's office hours brought this up. Strong by earnings. The price target 126. That's 210. Okay? Where's it right now? 122. It's a 4.74 out of 5 in the quant. And all of these metrics are green. Is this a good stock to buy before earnings? Because Wall Street thinks that it's a $157 stock. That's a 30% upside. And you can see the divergence between the actual price in blue and the target price in orange. Now, is it a great buy? Well, for our algorithm had you buy at 120. You're at 122 right now. You can see the back-tested results down here, 42% versus 39%. I've drawn a trend line that's down. I don't particularly like it, but you see that green line? Boy, it's holding on to that one. Want to know that green line? It's anchored down here at the low of 2022. And it's starting to go back up there. And you can see the range that I've put in here. If you go back up to 163, that buy at 120 is a fantastic buy. Risk reward. So let's go have Sidekick do a pre-earnings analysis. The executive Dell is in an extraordinary strong position ahead of Q4. Okay, I want to bring up risk. Major risk. Memory chip cost. Circle, repeat, rinse and repeat. Memory chip is the price, is the risk. DRAM and NAND prices surged due to AI-driven demand. Rinse and repeat. Chart analysis recently traded at 122. Key levels, 52-week high, 168, 52-week low, 86. Current level 122, recovering from a dip to 111. Pattern, stock pulled back 27% from October highs, likely due to memory costs, Morgan Stanley downgrade, broader strength. Again, you can read all of this in if you have Sidekick and do it. But I want to look at the final recommendation. Buy with caution in the 115 to 125 range. The bull case, 70% probability. AI server backlog is real and massive. Management has navigated cost cycles before, and they've done really well. Diversified business, PCs, traditional servers, and storage provide stability. Trading at huge discount to growth rate. Upside target 150 to 160 by year end 2026. Bear case, memory costs crush margins more than expected. NeoCloud financing issues delay AI orders. Traditional IT spending softens. Downside risk 100 to 115. Again, I've been burned by this one before. The wild card, the memory chip cost. Again, rinse and repeat. Where's the best opportunity to get this? If Dell gets crushed because of memory chips, memory pricing, guess where I'm going? Right to Micron, right to Seagate, right to SanDisk, and Western Digital. If they can't, if Dell can successfully pass through pricing and maintain mid-single-digit AI margins while growing volumes, this stock is significantly undervalued. Again, undervalued. When you go and look at the value, it's a B-. We talked about Palantir trading at 200 times forward earnings. This is trading at 12 times forward earnings. And when you add in their growth, their PEG ratio is 0.88. And again, their momentum's not bad compared to the sector. 3 months is up 4%. But 1 year, you're only up 1.99%. That isn't something that I particularly love, but it's not horrible. Again, it could be undervalued and the street could be getting it wrong. For earnings, I expect a beat on Q4 like they usually do, but the full year 2027 guidance will be the decisive factor. If they guide to double-digit earnings per share growth despite memory headwinds, the stock could rally 15 to 20%. If they sound cautious, expect flat to down. And when you go and look at the profitability metric and you look at their gross profit margin, 20%, where the sector is actually getting 48%. That's the issue with Dell. And I have been burned on this one before. So I will leave it up to everybody else. But that range looks pretty damn good if they beat. And if they beat, don't expect it to get to like this 120, 130 level. It will probably gap up and you can probably take it. Which line are you taking? The green or the red? And then you could have this FOMO. So let's talk about FOMO. From gold to crypto to AI, FOMO looms as a potential investing trap. Here's how to avoid it. What did Seeking Alpha do? Specific advice from Seeking Alpha analysts. We can just stop and buy some cheap stocks we want. I think the internal factors of companies matters a lot. Have solid fundamental stocks in your portfolio. My best advice is get a portfolio that actually works. And it's alpha picks. What am I adding to it? I don't have FOMO that I need gold. You know why? Alpha picks started picking gold like 6 months ago. They have gold miners. I don't have AI, envy. You want to know why? Because AI, they started picking AI in 2023, up 296% versus 80%. I don't need to worry about memory. Want to know why? They started loading into memory in October. So again, a portfolio. How do you resist FOMO? It's having a portfolio that is data-driven, that guides you, and it beats the S&P. And I always steer people, because when you start doing your own research after getting the Alpha Picks portfolio, you want to do your own research. So this bundle, which saves you $159, again, it's all here on Linktree. You can get the bundle with the second link. You can get Alpha Picks. And if you want Sidekick to do the analysis for you on the actual prices, enter with support and resistance, that's Trendspider. So the perfect bundle exists. It's the it's the technical data here with Trendspider, and you can get 52 training sessions per year with this plan. Again, a one-on-one Zoom session with a product expert that you can ask questions for. And then get the bundle. That's the perfect mix. So if you have any questions, again, even my email address is up here. The newsletter is free. Join us tomorrow on Tuesday for office hours at 9 a.m. I will talk to you later. Bye. Boy, there's a dog snoring in the back. Zscaler's not bad. Zscaler's interesting. I don't understand all of cybersecurity, and I bought CrowdStrike for the growth, and I bought Palo Alto because they were the number one. But you can clearly see, I mean, if we just put a line across, I'd say right here, it looks like that was resistance right there in 2020. And then you kind of traded sideways here from May to October. And then you used it as support. Now it's broken its support level down here at 149. But good God, you've never had the chance to buy this with the indicators that low. And Zscaler, I think it's cheap. Let me see what the Zscaler. Let's see what the quant has it as a hold. It's better valuation than it was 6 months ago. 6 months ago, it's down 44% from 6 months ago. But the momentum sucks. That's the problem. But let's see. Yeah, there's only one analyst that's brought it down, their earnings per share and stuff. And the Wall Street price target is $299. That's 100%. Again, any reaction is an overreaction. I think this is just crazy overreaction on these names. But you're seeing it down 6% today. Yeah. I mean, if you haven't been on here in a while, you may not know about Sidekick. Sidekick, I mean, Sidekick just outlines it for you. It's so good. I thought that was a good podcast. And honestly, the long version of the podcast probably is worth watching. I'll probably make mention of that. Desktop. Man, do you guys hear the dog snoring? It's already 10 o'clock. Usually I'm already done with this. She's so adorable. She's old. see. There we go. There we go. Let's see. Okay. And let's bring up Comet, the browser, to copy the title. And we're going to export. Let's put this up here. And export. Yeah, I agree with you, Travis. I mean, T-Scaler, what's their, let's see. Yeah, the peg going forward is still 1.8. Let's look at the peg here, 2.85. Yeah. And Palo Alto Networks, for me, probably should have sold it in the 170s, 180. CrowdStrike here has a peg ratio of 4.7. I think these still have more room to go down. It's just a matter of when you want to buy them. Because do I think that CrowdStrike is back above 500? I do. Honestly, I do. I don't think you take down the world and you don't get that premium back. But, you know, if I told you 3 months ago, 1 month ago, that you could buy this one on the left side of the 52-week slider, you would have said you're out of your mind. So let's go to Canva. YouTube thumbnail. Let's use this. I like this background. Okay. Oh, I don't want the period. Okay. Uploads. I'm going to look at NVIDIA. And I know that's down at the bottom. There we go. Why can't I grab that logo? There we go. And we'll take her out. And which Gary do I want? Let's put in Jensen. And let's see which one. Oh. Let's grab this. Edit. Magic grab. Grab this. Grab. And we'll take that. We're going to flip. And let's copy and paste. And effects. Whoa. What the hell? How did that get down here? Whoa.